In today's crypto news, the Bitcoin price could fall by 30% to 7,500, and we're going to be discussing this one crypto analyst who believes the current price action and rally back from 9,300 all the way up back down to where we're currently at is a sign that another retracement as low as the 7,000s is in place. And on the opposite side of that bearish prediction, I'm also going to share with you a bullish prediction which predicts big Bitcoin move ahead, possibly to $14,000. And in today's show, we'll also be talking about a new spot trend suggesting an incoming monster Bitcoin rally. All that and more in today's show. Here at Crypto News Alerts, I drop a brand new episode every day. Be sure to click the subscribe button as well as the bell icon to receive notifications of the latest crypto news. Welcome to today's show. We'll kick it off by taking a look at the crypto market. As you can see, Bitcoin is up 0.4%, currently trading at $10,411. Ethereum is up 4.91%, trading at $179. Miss Litecoin is up 3.62%, trading at $69.21. XRP is up 2.79%, trading at 25 cents. And as you can see, overall, a pretty healthy day for the markets. All right, now let's get into why the Bitcoin price could plunge by $3,000. Capo of Crypto, a trader, recently posted the tweet below, which shows the gold price action in 2012 to 2013 and Bitcoin's price action from June to now. So here's what he tweeted. Let's try with some fractals, Bitcoin versus gold, 2012 to 2013. And this chart I included in the description below this video for you to check it out. As seen in these charts, there's clear similarities between the two charts, a series of lower highs and higher lows, the assets retracing after their RSI reached overbought levels, and clear interactions with the key Fibonacci retracement levels. In other words, the Bitcoin price is seemingly doing exactly what gold did back in 2012 to 2013, which was its peak in the wake of the Great Recession. Capo writes that should the entire fractal play out, meaning Bitcoin will soon lose support at 9,500, a drop to 7,200 to 7,500, a key Fibonacci retracement support should play out. That would represent a 30% drop from the current level of about 10,500. And you can check out these tweets as well. He put gold drop also began with an ending diagonal. And then he also wrote, so if this finally plays out, the bottom should be 61.8% of the entire move, which is 72 to 7,500. Then some kind of consolidation, 16 to 24K in June of 2020, the Bitcoin halving. Now, keep in mind that Capo isn't the only analyst currently expecting Bitcoin to potentially draw back further. According to Jack, the lead analyst at a trading and analysis group known as Bravado, the most likely scenario for Bitcoin is to bleed our way to 7,400 in the falling wedge to bottom in early November. He points out that Bitcoin is clearly in a declining wedge with a downward sloping wave backdrop, implying that further correction is entirely possible. And taking a look at his tweet, he wrote, I think this is the most likely scenario for BTC. Bleed our way to 7,400 in a falling wedge bottom in early November. From there, we push in and break out and throttle full force, making our way back above 10,000 late November or in December and set course for the near all-time high towards the halving. And taking a look at this graph, he wrote Moon 20K, and that's where we see the big breakout. Now let's take a look at a number of reasons why Bitcoin is ready to appreciate greatly in the coming years, according to Adam Back. Number one, the May 2020 Bitcoin block reward reduction from 12.5 to 6.25 BTC per block. This is a pretty big deal, and May is right around the corner. The number of coins issued per block, which is every 10 minutes, will be cut in half, resulting in a negative supply shock to the Bitcoin market. Geopolitical uncertainty, you got places like Venezuela as well as Argentina, which their currencies have literally collapsed, and their government is limiting how much of their worthless currency they can dump into the markets. And then, of course, we got China duking it out with the trade war with Trump and the United States. These cases are only one of the many that show the world is unstable and needs safe haven assets, be that gold or Bitcoin. 17 trillion worth of negative yielding bonds. On Friday, Bloomberg reported that the negative yielding bond situation has just developed. Their report, which cites the Bloomberg Barclays Global Aggregate Bond Index, shows that 17 trillion worth of bonds is in negative yielding. Holy shit. And then there's modern monetary theory becoming a popular trend, MMT, which is effectively an economic framework that says the government should heavily utilize fiscal policy to boost their economy, has become a popular trend in global politics. Many critics of the theory say it will result in mass inflation, leading to an increase in the valuation of hard monies like gold and potentially Bitcoin. Now let's take a look at this big Bitcoin move ahead chart that was published on TradingView by Westlad. So here's what he had to say. Without wasting time, we all know Bitcoin has been trading inside a symmetrical triangle since the 26th of June, which is approaching the final decision-making leg if we count the wave movement in terms, presenting formally the last wave E of the triangle. Looking through this triangle patterns, there are some continuation pattern forming there, in such as number one, potential inverse head and shoulder formation, which targeted at $12,550 to $12,700 zone. And in this graph, we can see this bullish target going all the way past new all-time highs for the year, hitting $15,600. Number two, already existing bullish Gartley pattern, which pointed towards 15 to 16,000 as the target. As we can see right here, you see this huge pattern leading all the way up. And number three, price forming potential ascending broadening pattern and leg ABCD already completed the price in the move for that last leg towards $15,000 to $16,000 target zone, as we can see right here in this graph. Number four, potential cup and handle formation, which handle pointed towards the same entry zone around 97XX to 99XX for a possible long accumulation, with overall pattern targets around $12,000 to $12,700 level. And he also had to share the good things about all these patterns is that they're all bullish, which provide almost the same entry point with the same stop target zone. Remember to respect your stop loss should in case the trade did not go as planned. We analysts propose, but whales always have their plan, which cannot be changed because of anybody's analysis. Something to keep in mind. And I went ahead and included this incredible resource for you to check it out for yourself in the description right below this video. Now let's talk about this spot trend suggesting an incoming monster Bitcoin rally. Many armchair traders are so focused on the short-term price movement of Bitcoin that they forget to look at the big picture. For instance, the widely followed analyst Crypto AMD is expecting the dominant cryptocurrency to dump below 10,000 and then be tapping resistance of 10,500. That's the trader's short-term view on the digital asset. Let's take a look. All right, taking a look here at his tweet. He wrote short-term outlook on BTC along with this published graph going down to 10,000 and then taking us right back up. It's easy to get lost in the short-term price action. However, some traders are resisting the lure of quick money by looking at the longer time frame. One analyst carrying a pseudo-anonymous name, Nunya Business, shared an interesting Bitcoin trend on Twitter. It appears that the dominant cryptocurrency has always put together a massive rally following a predictable pattern. So here's the tweet from Nunya, BTC Weekly, occasions where Bitcoin had 3+ consecutive negative weeks within a bull trend. And in the chart attached to the tweet, you'll see how Bitcoin rallied higher after a significant correction in the form of 3 or more weekly candles. Take note, the trend is only applicable whenever the king of cryptocurrencies is uptrending. In addition, Nunya Business appears to have only covered the price action of 2017 to 2019, so we took the liberty to expand the horizon to see whether the pattern holds. We discovered that it does. The green boxes shown in this graph show the number of times that Bitcoin had 3 more consecutive weekly candles while in a bull market. All of them were followed by a massive uptrend. Nunya is not alone in the expectation that the number one cryptocurrency will surpass expectations after this correction. President of Magellan Capital, David Twill, spoke to CCN and revealed his longtime view on Bitcoin. He wrote, "I expect that it will soon trade to 15,000 and above. There is a lot of volatility in domestic security markets and many currencies abroad very weak in the face of a strong dollar. Those fundamentals, coupled with an increasing number of business and financial institutions adopting blockchain technology and creating tokens, will give the sector the necessary bullishness to climb considerably higher." Now let's take a look over at the BitMEX margins, and you can see that the bears are currently winning with 25 million in superiority and 50.6% shorts versus 49.4% longs. It's almost a pretty equal battle at this moment. Which way will it go? Will the bears persevere, or will the bulls come out on top? Let me know in the comments down below. So on today's show, I shared with you some bullish predictions as well as some bearish predictions, but something they all have in common is it's bullish for the long term for Bitcoin. So whether we drop back down to the 7,000s and revisit those levels before springing back, right, to new all-time highs, either way, the future of Bitcoin looks very bullish. That's why we're on this rocket ship heading to the moon, if you haven't figured that out. Well, that concludes today's show. As always, I appreciate you tuning in. Don't forget to smash that subscribe button as well as click on the bell icon to receive notifications of the latest crypto news as soon as it's released. And oh yeah, don't forget to check out the description right below this video. I've included some incredible resources to help you take your crypto game to that next level. I've also included my referral partner link to Bybit, where you can long or short Bitcoin with leverage. And if you deposit 0.2 BTC, you will receive $110 in free Bitcoin that you can use for trading. So right below this video, I've included my referral partner link for you to sign up and take advantage of this limited time offer. And I've also included a tutorial walking you through step-by-step how to long or short Bitcoin with leverage on the Bybit platform. Once again, thanks for tuning in. I'll catch you on tomorrow's episode. Peace.